Okay, investors, three amazing applications to find great stocks and ETFs and minimize your portfolio loss and also maximize return. Go to diverset.com website, go here to Diverset, then choose your risk appetite. Let's say I'm a risk averse investor. Then I want 15% yearly return, show the result, and Diverset web app will find you stocks tailored to your risk appetite. Then your next step, once you found amazing stocks tailored to your risk appetite, like here, go to App Store and input stock target price, like here. Then download the application, open the application. Once you open the application, register, create your login, and then input the stock ticker of the stock that you want in your portfolio. Let's say I want Alphabet shares. The goal of this iOS application is to find stocks with great growth potential, stocks that those target prices are higher than the market price. For example, Alphabet share. I'm inputting the stock ticker, then press calculate. And as you can see, I can press percentage change. As you can see, the stock has 11% growth potential. We can choose that stock in the portfolio. Let's say Google shares. You don't have to tick here. If you don't tick and press build the portfolio, Diverset will build your portfolio from 10 the most liquid stocks from the list. But if you tick and choose 10 stocks, please choose exactly 10 stocks. If you choose 10 stocks, Diverset will construct your portfolio out of 10 stocks. It will allocate asset weights in such a way as to maximize portfolio return and also minimize losses. Let's choose another stock as well. From this list, I have a little bit prepared and I found stocks with great growth potential. For example, XOM. I open my iOS application stock target price and input XOM and then press calculate. And as you can see, the stock has 29% growth potential. And your goal is to choose 10 stocks with great growth potential. Sometimes my application gives you shows that the stock is not undervalued but overvalued. For example, let's take Visa share. Yes, in this case, it shows 34% decline. That's because I'm using very conservative assumptions. I'm using DCF model with very conservative assumptions. That's why the application is showing target price that low and it is indicating fundamental decline. And your goal is to choose stocks with rise here. Target price should exceed market price, but if you didn't find the stocks from the list, then at least find stocks that are fairly valued with this percentage not lower than 5% or 10% or maybe somewhere in this range. Sometimes you will have difficulty finding undervalued stocks, but at least find stocks that are fairly valued. Those target price is closer to the market price. But it would be great if you can find stocks those target prices exceed the market price by 20%, by 30%, and so forth. Then what you can do, you can also employ another great application. It's called Stock to Buy. Open App Store, and in App Store, in the search bar, type stocks to buy. That's another great application. Here we go, stocks to buy. Also download this application, and when you open this application, input the same ticker as we inputted before, let's say Google shares, and then press show analysis. And as you can see, the application tells you that it's a great time to buy. So your selected stock has a buy recommendation based on strong buy rating, earnings surprise of 26%. That means that the company actually showed earnings 26% better than analyst estimations of the earnings of EPS. Let's close this, and you can see the buy recommendation. The same we can do with previous shares over here. Let's input the ticker XOM and then show analysis. And as you can see in this case, it gives neutral recommendation. The company has buy rating by analyst. Stock sentiment is zero point 0.5. It means that the positive mentions are equal to negative mentions on the social media. Basically, this application takes mentions on Twitter, calculates positive and negative mentions, then takes equity rating by different analysts. It's a consensus rating. It can be buy, strong sell, neutral. Then it takes EPS surprise by how much company reported uh, actual EPS was better than EPS estimated by analyst, and then it showed the EPS surprise. In this case, it is not showing EPS surprise. The estimated earnings were higher than actual earnings on 6%, and that's why based on all the three indicators, it shows you weighted recommendation based on three indicators and their weights. It shows you the neutral recommendation. Ideally, you should find 10 stocks with great growth potential and with buy recommendation. But if you don't find stocks with buy recommendation, this analysis will take time, I know, but you should uh, devote time in finding great stocks. That would be your job. But if you cannot find stocks with buy recommendation, as we saw previously with Google shares, you can see buy rating over here, and ideally you should find stocks with buy overall rating with strong EPS, strong analyst rating, and high sentiment. And once you find 10 stocks with great growth potential using stock target price app, and once you find stocks with buy recommendation over here at the bottom using stocks to buy application, you can start building your investment portfolio. Well, for the purpose of this video, let's not spend further time selecting stocks. I just showed you example on two stocks. Now, I don't want to spend your time analyzing each stock separately. Let's say we've made an analysis and found stocks with great growth potential and stocks that have buy recommendation based on stocks to buy iOS application. And we've selected exactly 10 stocks from this list. Now you can press Portfolio Builder button, and Diverset will build your efficient investment portfolio. Now Diverset says, listen, you've selected 10 stocks, and if you put these weights, exactly these weights in your selected stocks, so for example 5% in Google shares, 5% in ExxonMobil, 25% you allocate to Walmart shares, 16% to Vanguard, 19% to Visa shares, 4% to Amazon shares, then I can minimize your portfolio's volatility to only 1%, and your portfolio's expected return will be 65%. So initially you inputted 14%, but Diverset says, I can maximize your portfolio's return, not 14%, but I can get you 65% yearly return and only 1.06% volatility if you allocate your assets, put portfolio's weights exactly like I show you in these proportions. If you allocate your assets in this way, as Diverset shows you, then you can get 65%. And these are all stocks that we've selected using two iOS applications, stock target price and stocks to buy, and also using Diverset. That is how you can employ three great applications, Diverset, stock target price, and stocks to buy, to find wonderful shares, build efficient portfolio, maximize its return, and minimize portfolio's volatility using three applications. Thank you very much for watching.